welcome to another video from the Trader Guy, and this is being done on December 6th in the middle of the US afternoon, so most of the trading day has already transpired. And this is a look at the Swiss franc in particular. Now, the Swiss franc is in a different kind of universe presently, just simply because you've got the Swiss National Bank, and they are working to drive the value of the franc down. And in fact, a little while ago, sometime in September, towards the beginning of September, the Swiss National Bank announced that there was going to be a floor. They said that it could be no longer tolerated a rate of 120, or I should say sub 120 in the EU RCHF, the Euro Swiss franc pair. Now, this, of course, in front of you is the dollar Swiss, and you can see that's the day. I mean, the Swiss franc sold off against everything, and since then, we've kind of found our floor here at 85. Now, while this goes on, you can see that that's the top of the intervention. We came back, we pulled, we retested, and we confirmed that there was support there. Now we're at an interesting area where we are testing the highs again. 90, of course, looks like it's supportive at this point in time. And once we went back through it again here recently, we came back and we didn't even quite get to 90. We found enough support there. So it's a very interesting time in the Swiss franc in the sense that although this isn't the Euro Swiss, and I'll look at that next, but it is affected by the fact that the franc is being worked against by the Swiss National Bank. Now, most people will look at this and they'll say, well, who cares? I mean, look at dollar yen. The Bank of Japan has been intervening in that and failing massively as time goes on. But there's a huge difference in the sense that the Swiss franc market is much, much smaller than the yen. And as a result, the S&P actually has a chance at making a serious impact, and that's why they haven't been able to break it back down. So looking at this, you can see that we are trying to make what would be a higher high, and this would be a confirmation of a trend change by most people's definition. I'll go ahead and look at the weekly chart, and you can see how important this area really is. We have a hammer last week that was formed at the 90 level, and we are butting up against the highs again. Now, going back in time a little bit, you can see that this is an area of congestion, so it makes sense that we are struggling around 93, and 93 is the beginning of very interesting point in this pair. Because of that, a break higher would more than likely have us re-entering this consolidation area and probably seeing 95 pretty quick, as well as maybe even trying to make a run back towards parity. I would expect that the move's choppy, though, because of the technical structure of all this. It looks like there's a lot of noise in there. But let's take a look at why fundamentally this would be going on. And this is a greatly simplified version of the fundamentals, obviously, but you have the US dollar, and it is a safety trade. And there are plenty of things out there that have traders nervous right now. So certainly it would make sense the US dollar gets bid up, and it has been against several different currencies. The Swiss franc used to have the same status, but it's being worked against. So while the S&P isn't necessarily concerned about the rate of the franc versus the dollar, they will notice it. And if for some reason this pair absolutely fell apart, they would more than likely get involved. So it makes sense that since traders really can't buy francs anymore without fear of the central bank working against them, that they will run to the dollar. So we've actually seen a reversal of the traditional flow of money into Switzerland when times get concerning. I mean, that's been, you can see that was the trade back then. It looks like about the beginning of July, as we started to panic more and more and more. And if you look, July 2010, I should say, sorry. But if you look over time, that correlation is held up as well. So it looks like we're getting a bit of a reversal on this. So having said that, we are at a very interesting level in the Swiss franc, and 93 to me is what matters. Now, having said all that, let's take a look at the Euro Swiss. This is a weekly chart as well, and you can see there's an obvious area at 125, and actually just a little bit below that is the beginning of pretty serious consolidation and support and resistance from previous times. It goes about 500 pips. So the idea is if we can break higher, we'll enter this box. There's a lot of talk presently that the Swiss National Bank may raise from 120 to 125 the minimum acceptable rate in this pair. If they do that, this will jump and it will go into that area. There's also talk that eventually they'll move to 130. They're incrementally trying to get back to a more normalized rate. Now, interestingly enough, we have, much like last week in the dollar Swiss, we have a hammer. It's not necessarily on a major support level by any stretch of imagination, but it does show that the pair's natural proclivity is going to be an upward direction. At least it appears that way now. So the Swiss National Bank could come in and raise the floor. If they do, that'll provide a violent return of the bulls, more or less, or perhaps just short covering for that matter, but it will send prices higher. Also, this week, I should say, on Thursday, you have an ECB meeting. There'll be rate cuts from what people were expecting, and if that's the case, then that could be euro negative. But more importantly to the market than the rates are going to be the EU summit on Friday. If something comes out of that that looks like solid fiscal reform out of the EU, there is a real opportunity that this may take off. All euro-related pairs will probably take off. Now, down the road, we have some recessionary concerns and such in Europe, but there should be a massive move, a relief rally, if nothing else. Again, that is another catalyst to get above 125. I will even stick my neck out here and suggest that perhaps the Swiss are waiting to see if that happens. If it does, they will more than likely be happy to announce that floor, because not only will the price of the currency be over that, but it'll be easier to defend as people were kind of walking away. They've learned some hard lessons on some bad interventions recently in the last couple of years that they've just got absolutely whacked at. And with that in mind, they will more than likely let the market lean in one direction before they push it going forward. That's just my opinion. I don't have any knowledge to back that up other than it just would make sense. So I think ultimately this pair does rise. Now 125 has got to be an area you watch. You also want to see at least a daily close above that to kind of prove the validity of it. Currently we're seeing 124 to 125 as massive support and resistance, and I really think that this level will determine the long-term trend of this pair. If we can get over this, we may return to the old buy and hold mantra in the Euro Swiss, and if that's the case, this may end up, at least for me, being a multi-month trade. Anyways, that's my thoughts. The Swiss franc right now is the most interesting currency to me just simply because of these two charts. There are a lot of dynamics around it, of course, and we'll have to see what happens. But by this weekend, and we could very well see some type of move in the Swiss franc that could be very definitive for the next at least several months, if not next couple of years. Okay, guys, if you want to get a hold of me, you can always contact me at chris@thetraderguy.com, or feel free to come to my site at thetraderguy.com and check out the educational course, forums, etc., etc. Thanks.